Three, two, one.
Hello, everybody. This is Michael DeGioia with the #1 Best Trader Competition, and this is a event that's hosted by DAS and Nasdaq. It is our #1 Best Trader Competition Fall Intermediate Competition. This is our Week 3 review. And as always, my name is Michael DeGioia, and Director of Educational Services and Licensed Professional, joined by my co-host, Jill Malandrino, Global Markets Reporter from Nasdaq. Jill, how are you?
Good, doing well. Thanks, Mike.
That's awesome. Another long week in the markets, and we're wrapping it up before the weekend. How are you hanging in there?
Good. It has been an incredibly busy week. Lots of IPOs. We had 9 on Thursday. Covered the FinTech conference on Tuesday in New York. So feels like activity is kind of getting back to normal. And you yourself, you're at a conference in Dubai, you said?
Yep, it was funny enough. It's the Expo 2020 in 2021. Well, funny enough, it's amazing. Like everything, I guess they printed up so many signs and built so much that said 2020. They just decided to go with it, regardless of the fact that it wasn't in 2020. It's in 2021, but it's actually a 6-month-long expo. It's kind of like a World's Fair. With lots of technology and all kinds of exhibitions from all over the world, about 200 countries represented. So pretty incredible event. So for me as well, very, very busy week. And let's jump right into the news so we can start our weekend sooner rather than later. But we've had a very busy week in earnings. Early trends seem to indicate that earnings seasons banks beat, while some technology companies had some earnings that fell flat. I mean, speaking specifically of, just give you some examples, Intel still having some tough time, but we know overall semiconductors in general seem to be having a tough time with the supply chain issues. And then, of course, Snapchat in the kind of internet space and online space, social media struggling a little bit as well. So any early trends that you've noticed for earnings season?
Yeah, so it's interesting the way that the market has been trading over the past week and a half. We've certainly seen that in the major averages. I think they all closed for their third week straight in the green. I was just checking on my charts over here. And what's interesting is with all of the variables in the macro backdrop, stocks have largely ignored it. And I think a lot of the movement has been predicated on what we've seen in earnings with financials, of course. I mean, the deal environment has been amazing. I was just telling you about the IPOs that we had this week. And then also we had some good healthcare earnings. But I really think, Mike, that the tell is going to be what we see over the next 3 weeks when technology and retail names report. Healthcare and finance doesn't have necessarily the supply chain distractions that tech and retail have. Holiday 2021 is shaping up to be a little bit sketchy. So I think that's really important. So what they do for the quarter and how they guide, I think, is really going to be the next catalyst. Because again, financials and healthcare really don't have that kind of exposure. But I do think what else is interesting, we took a look at a survey with our chief economist, Phil McIntosh, this week. And when you look at professional investment managers, their top concern is no longer COVID. Inflation is the absolute #1 concern, but not so much tapering. Now, that kind of seems a little bit counterintuitive because if you're concerned about inflation, tapering comes along with that. So I get the sense this is going to be somewhat of a more stock pickers market at some point. And you will see companies within the same sectors like retail or tech trading in sympathy with each other. So I think the next couple of weeks will be interesting because of that.
Absolutely. And that brings us to our kind of next news point. I mean, obviously, it seems like some measures have been taken by China's Evergrande to avoid a default by paying interest this week. But the question is are there more systemic problems? I mean, inflation, could be looked at as, kind of obviously we've already established it's not transitory, which we said kind of from the very beginning. The question is, are there other systemic problems and or possible pitfalls hanging out there for the market besides for inflation and or energy prices? Because it looks like energy prices is a big factor in inflation. And certainly there's all these supply chain issues, which could potentially, be the Grinch that stole Christmas, which was our news item of last week.
Yeah, Mike, I would agree with you 100%. I think the next few weeks, well, certainly the last 6 weeks of the year are really going to be key here. Inflation is going to be an issue. Of course, that ties into labor. We don't have enough people to unload whatever cargo ships are coming in. And that's a problem. It's one thing to unload them, but you need drivers and other logistics workers to get them to where they want to be. There was a report on CNBC today. I think Jane Wells was reporting from one of the ports in LA that they still have Halloween stuff on these cargo ships and the containers that they come in. Well, it's October 22nd already, and they haven't been offloaded. So what's going to happen? All this inventory is going to be discounted for sure. At some point, these costs are going to get passed down to the consumer. Only I would imagine the larger big box stores can absorb the margin compression more than a mom and pop or smaller chain stores. So I would think inflation, labor, earnings as it relates to the supply chain, those three things are going to be key. Of course, we're talking about Washington and reconciliation packages and so forth. But I think from a fundamental market perspective, those three things really count.
I think there's going to be a lot more sheets coming off the bed for Halloween this year as kids become ghosts and or making Halloween costumes out of paper mache, like I used to do as a kid, or maybe the paper bag over my head. But I mean, needless to say, I think that we're going to have a little bit of creativity this Halloween. But you're right, the supply chain issues are persisting, and it doesn't seem like they are letting up, and can certainly affect the economy overall. And I think that's the reason why it's the biggest fear across the board from all the various different analysts. So on that note, let's jump right into our competition weekly overview for week 3. Now, I'd just like to say that we are currently working on our ranking page. So the kind of update in relation to who's in the lead is going to be a little bit different than you're used to seeing it, but that will be resolved soon enough. And certainly by next week, as next week will be the final week of the competition going into the end of the month. So we have best 563 is in the number 1 spot, best 964 is in number 2, and then best 579 is in number 3. The top stocks, and this is the one that I wanted to ask you about, is DWAC. I mean, absolute craziness with them in talks to do some kind of a SPAC acquisition merger with Trump Media. Tell me what you know about what's going on with DWAC before I jump in and take a look at the chart.
Yeah, so what's interesting is with DWAC, and of course, just a reminder on how SPACs work. Essentially, they're a blank check company. They have a certain amount of money that's held in the trust. Let's call it $1 billion for the sake of this conversation. And that $1 billion needs to be spent within whatever time frame is attached to the trust. So it's usually about 2 years. So when a SPAC like DWAC is looking to target a company, in this case, it's President Trump's planned social media platform, what they do is they would merge with the platform, which I think is being called Truth. And once that merger happens, it will trade under DWAC, and then that's when Trump's media platform will be public at that point. So the deal hasn't closed yet, just the plans to merge were announced. So I think it's interesting to see if it will merge at the end of the day, right? Because there's a lot of money that went into this. Think of Trump however you will, whether you're a fan or not. It's clear to anyone that his name does certainly have presence, and whether he executes on his deals or not, he definitely has a brand attached to him. So I thought it was really interesting to watch just how it traded, and you could tell by the way, Mike, and how SPACs they trade closely to their NAV at around $10. That's pretty standard. There's a number of other ways to analyze a SPAC based on how their warrants are trading. That's a different conversation. But with DWAC, the announcement was made pre-market, saw a little bit of movement there. But once it got out to the general public and you started seeing retail investor flow, that's when it started to move. So this was pretty interesting.
Definitely. A phenomenal run from like $11 to $70. which we're going to look. I mean, it was all over the map. I mean, crazy chart on that. And actually, let's bring up the chart right now.
Well, actually, Mike, let me ask you a question. And I've often wondered this with people who are technical analyst experts, which I certainly am not. With a stock that trades like a DWAC, when it goes from 11 to 70s in one day, can you still use TA on something that trades like that? Or
so basically, I'm going to use this, and this is pun fully intended. So news always trumps technicals. Okay.
Right.
So news always trumps technicals. And yes, the stock does trade technically, but as soon as the stock breaks out above all-time highs, there's no resistance. You are blue sky new highs. So, this is DWAC ran, if we're going to zoom in here on the chart. We're going to look at this on a 15-minute basis. So if you look at this, I mean, basically this is a company who had previously at the high of its pre-IPO offering, or at the high of its post-IPO offering, had gotten to about $20. It really gravitated around $15 and then kind of drifted down into the $11 range, which is where this news came out. So the first level it runs up to is the prior resistance, which is that $20 level. After it pulls back, okay, it breaks that $20 level, and then there is no resistance. So it really can go as high as supply and demand will take it. So what happens in this case is there's not many shares outstanding, so there's a very limited amount of supply. And if you think about this kind of like a baseball card or a comic book, if there's only 10 of them out there, or there's only X millions of shares out there, it takes very little demand to drive the stock even higher and higher and higher. And in this case, it runs all the way up to the $70 range, $72 yesterday. Today, it broke out again. This technical analysis absolutely does work. As you can see, a trend line here. And we have a pennant that breaks out, which pennant is a bullish pattern. We could see another pennant here. So we can see that this is consolidating for further breakouts from our technical analysis. And then it breaks out. Amazingly gets up to $175 on the gap up on open. And then obviously the short sellers come in and start pounding the stock, or it just becomes so egregiously expensive to short or find a locate, that the other side starts to push back. And you can see there's a tremendous amount of volatility here as it goes from 175 down to a low of 83, but it touches that kind of technical congestion level here at the midpoint of, we call that the apex of the pennant, which becomes now its new support level, which it holds and did not break down below. But I would imagine that probably tomorrow, as this news is completely not finalized, I mean, this is just talks. Everybody's just rushing to the party and driving up the price of the stock. Currently, it's sitting at around $82, and let's just see a DWAC. I mean, this is a great plug of the DAS platform, DWAC, is that you can trade on DAS, and look how actively trading this is. I mean, this is trading away at this moment. The market is closed, and you can continue to trade this on DAS because it's trading until 8 p.m., which is when the market officially closes in the post market before the weekend. Very powerful situation, very powerful stuff. I hope that was a very long answer to your short question. So. But yeah, technicals work, but news like this will trump technicals any day of the week. So last but not least, we have PHUN. I would call these, so PHUN has a very similar chart to DWAC. So I would imagine that this has something to do with the deal as well. But again, these are the top 3 stocks traded by our competition traders. And then UPST is trading at $344, but this was the number 3 top actively traded stock. It had a tremendous run up, and then this week was very big on the downside. which this is a very easy stock to locate for shorts. So it's a high flyer, very easy to locate. So that's why I think a lot of the traders were shorting this pullback after this stock had hit a big resistance level at 400. So those are our top stocks. I want to just wrap up and say thank you very much. Actually, you know what, Joe, I just wanted to bring up the market. I mean, the one thing I will say is that the S&P is, speaking about technical analysis, is at all-time resistance. I mean, we did make a new high, but if you look at this, we are making a double top. I mean, this is two tops. So if the market's going to go down, this is the place that it would go down from. And in fact, the Nasdaq, which has been leading, actually did go down today. Right. So the technicals do, like in the Nasdaq, is actually a high and then a failure to make a new high. The Nasdaq has been leading the market up, so it should be leading the market down if we're going to make a move to the downside.
Right. Well, and which is so interesting because as we were saying, the next 2 to 3 weeks, as we learn more about the companies that have the most exposure to supply chain, the timing looks right.
Yeah, it does. It absolutely does look right with these supply chain concerns and the continued concerns about inflation, et cetera. So we'll see how it plays out. But I want to thank you for being here, and I can officially give you your send-off into this weekend.
All right. Thanks so much, Mike. Have a great weekend.
Safe travels. Great seeing you as always, Jill.
Take care.
Bye, everybody. Bye, Jill. I'm going to just wrap up our broadcast for today. Okay, our competitors review your strategy, what has been successful for you. Hopefully you, by this point, it's the third week of the competition. Hopefully your competition has been great and you've learned a lot. What have you learned from? Number 3, what have you learned from? What have you been successful in doing? And what mistakes and mistaken trades have you made? If you've had any, if you have any additional comments or things that you'd like to see from our competition overviews or market news, certainly email us at info@number1besttrader.com. Fall intermediate competition runs through October 29th, right before Halloween. Visit us at One Best Trader for more information. Follow us on social media, etc. There are all the links. And of course, everybody can follow DAS on all of our DAS updates. Make sure you subscribe to our YouTube channel, DAS Trader TV. Follow us on social media at DAS, LinkedIn, Twitter, Facebook, and Instagram. I want to wish you all a fantastic weekend. I hope you have a great final week of the competition. See you all next week. Bye-bye from Dubai.